following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show, first of the year. And the market is having a seizure here all of a sudden. And we're going to talk about what that's related to. That's the news out of China, this Saudis, I'm not going to say Obama kind of left them completely hanging after the Syria line in the sand thing. And, they've been on our side of the fence for the most part, and they come in and execute a couple of folks. No big deal. I'm just kidding. And what happens next? They get their embassy in Iran stormed and burned down to the ground, and that's just one of many things going on. But markets don't like those types of things. And the thing in China that's going on is the Shanghai pulled back almost 7%, hit some circuit breakers, and we're going to talk about that. We're going to show the chart. Taking a look at the Shanghai initially, we always talked about this big line in the sand. Going back to the Syria comment from Obama, 33.12. Where do we close today? Close today at 32.96. So, again, I'm going to call that the noise area. This is, I hate to kind of do what-if scenarios, but this really has to hold, or the next stop down is going to be 3,000, more than likely in a blink. So, the U.S. markets are going to take a look at that. They're going to take a look at this for support. Let's see here. And the U.S. bonds, notes, structure, those are headed up. A little bit of a fear bounce here. The dollar relatively stable, ticking down a little bit. We're going to talk a little bit about the currencies, talk about the Aussie dollar, my trade that's gone south now a little bit. And we're going to talk about the Canadian dollar. We're going to talk about crude oil. And as I go into crude oil, we're having a little bit of a sympathetic bounce here, but in times like this, you would consider this a situation where you more than likely have more of a bounce in crude oil. That 36.82 we've gotten back above. We never closed below it on this February contract, but we'll get into that a little deeper a little later in the show. American Express had some new latest bad news of Fidelity dropping them. So the Costco bomb dropped, and now the Fidelity bomb dropped. We're going to talk a little bit about Tesla today, too. Tesla, I rode in a Tesla over the holidays. A friend of mine that I grew up with, his brother, just went out and bought an $80,000 Tesla. And that thing is literally unbelievable. I'd never ridden in one. If you guys have ridden in a Tesla before, you know what I'm talking about. Will literally press your head right to the back of the seat, and it's an amazing. It's awesome to drive too. You can. I don't know if you've. This is kind of old news, but it's new news to me. And if you guys get a chance to go test drive one, go do it. Very interesting car. A lot of space. Little motor. A lot of space. All right, so. We're going to talk a little bit about some Dow 30 stocks, too, for the beginning of the year, how they ended, what might be on the horizon for some of those stocks in the new year. But I think what we should do to start off with is really look at the notes, first of all, and then we're going to look at the S&Ps. And I'll flash the S&Ps here for a second. Looking at, what's going on here, we always talk about let's wait patiently until some major inflection points are hit. Well, we hit it this morning to the tick, low 1995. That inflection point's 1994, rounded off. You've got these in the scanner. And by the way, I want to mention the scanner really quick. And I'm going to be a little tripped up on our times here because we're having breaks. And We're only having 3-minute breaks, by the way, so I cannot go take a shower during the break. I can't do anything. I got to sit here and compress time with you. Just kidding. But talking about the scanner, last week or right before the holidays, we had talked about getting videos, new version out, everything. I'm going to just show you where we're at with this. And what we wanted to do for your benefit, we've got all our data in here. We wanted to watch this, since we made changes, we wanted to watch it during trading hours. So that's what we're doing today. But as you can see, we've got all our charts in here. You guys are going to have a blast with this, I hope. And Tucker, if you're watching, I did a crap load of videos, I'll just put it that way, and wanted to kind of release this all at the same time. So again, we wanted to watch this, especially on a very volatile day, watch how the charts are acting in situations like that. So hang in there. We're about 24 hours away from releasing this, and then all this stuff I promised this week. So let's see here. All right. So there's some derogatory comments towards me in the den again. Thank you. I'm just kidding, guys. Just checking in. Let's see. We got our first break. All right, new schedule, first break. We're going to be back in 3 minutes, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I don't know how to say this, but kind of a big deal. Remember that in in Anchorman? I think about that when I'm listening to Jay's comments in the den here, and I have to say that. All right, here we go. Now listen. This year is going to be awesome. If you check the TFNN schedule, all kidding aside, guys. Watch the show on Tuesday and Thursday morning with Nico and Primal Living. Man, I'm actually looking forward to catching that pre-market, getting in the right frame of mind health-wise all year long. But Tuesday and Thursday morning, that's a new show that's starting very early. So you guys will be more the wiser to what in the world do I hear here? More the wiser to listen to that show. We're talking about 3-minute abs and things like that, and biannual workouts in the den, and that's just not going to work for anybody. These are jokes. Okay, here we go. All righty. Just checking it down here. Good Lord, there were some comments thrown in here. All right. Okay, so again, we're watching this on a very active day before we release this on the scanner with these new features. And I know you guys are going to enjoy this. Let's just look at the globe here, 1 hour. I would bet my life that the Shanghai's in the cellar here on the 60-minute, and there it goes. Wow, that's incredible. Tucker, we have eclipsed the 70% outer band area on the Shanghai. Woo! My goodness. All righty. Okay, so what we're going to do now is we're going to look at the S&Ps a little bit more with the microscope here, and we're going to pull up our breadth charts, and we're catching some pre-market activity now. Well, as soon as these stocks and these internals open, as you can see, a lot of these that are opening. I'm looking at our 60-minute column here. I'm going to sort this really quick, and I'm going to show you. We are, again, this is showing pre-market activity when it comes on board, but we're at the 80% area now, and this may actually get worse. So, what do you do with this situation now? You're going to have some of these longer terms kind of roll over now, but let's just kind of back up for a second and look at the index as a whole here. All right. So we've got 2003 rounded off the POC here. Remember, this is the top of the hill. We're either going to roll up to it and roll back that way, or we're going to roll over top of it and possibly keep going. I mean, that's kind of the layman's terms way to look at that. But we've also got the bottom of our profile on our daily at 1994. So that DMZ between 1994 and 2002, 3 in there, that is going to be something that I'm going to personally just stay away from, that DMZ. All right. Because these two inflection points are very big deals, put it that way. It's kind of a big deal. Actually, you got a relatively wide profile on our weekly. On our weekly. Relatively wide profile. That POC is going to have more prevalence, and you've got that 1994. Now, going into some things that Tucker had mentioned last week, at the same time, you've got a massive expansion, if you will, of what's going on with our odometers, speed dials, whatever, on our short-term 60-minute. Now, he's been using that on the short-term basis as, we've got a different situation this morning. We've obviously got big news events overseas pre-market without question. But as we look at this, what do we do in this type of situation? In my opinion, you've got a decent trading opportunity around this DMZ, and I'm looking personally to play around with this on the long side, all things considered. I mean, we don't have a lot of direction still in the S&Ps on a long-term basis yet. All right, we're going to have some things roll around today. Obviously, what are we gapping down 300 points in the Dow right now? But as we look at this number, we're down 33 on the S&Ps as we speak. You're gonna, at the first 15 minutes, you're gonna have some people seriously adjusting their stock positions. That's just the way it goes in the, as the market opens in situations like this. But I'm looking at this literally as a trading opportunity on the long side. I don't think anybody would really have the odds in their favor selling a down opening of this magnitude. So, what are you looking for here? We've come down already and hit the bottom of our DMZ at 1994. And I'm just trying to give you guys some pre-market ideas about, the S&Ps. Could we have some more follow through in the Shanghai? Yes, we could. Could they come in with government intervention again overnight? Yes, they can. All right. So looking at the notes here too, I'm just going to do some relevance type thinking for you guys. Looking at the notes, I would have expected much more of an explosion in the 10-year than this. We barely just got above our 126.01 area, and this is not something that I'm looking at terribly as a detrimental situation here for the U.S. stock market yet. I mean, I'm looking at it as a trading opportunity on the short term, getting away from that DMZ from 1994 into 2002. So, bonds and notes. And I'm looking at the 30-year too. Let's look at the March contract here. We're not getting really violent reactions, and we're also not getting past. We're not actually kind of continuing to climb on the highs of the current session. So, what does that mean to me? That means, and the bonds and notes, to be honest with you, are usually right. Tom will probably talk about that periodically. A lot of the smartest money will trade in those treasuries, and that's a pretty good barometer of what's going on. Stock market. Again, I'm not so convinced that we're going to go to hell in a handbasket here. Let me check our new times. Make sure I don't rattle through the next break here. 27. Okay. We're also going to take a look at gold. There's not a lot of fear in anything in my opinion, than a sympathetic move down in the S&Ps. Gold obviously is moving up significantly, but remember, and again, we never got to close below that 1060. So that's what we've been talking about on the show left and right, is we really need to see a close below 1060. Well, guess what? Now we haven't had a close below 1060. You got a decent move up this morning. This is our weekly bar. You've got an output there right now. Let's go back to our scanner and let me pull up gold here. God, why can I never find this? Here we go. Gold. There we go. All right. So as we look at this is the level of the market. And I'm going to pull that up one more time. This is the level of the market. So we've eclipsed some. I hear the music, guys. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And Larry Pesaventos is got the flu, and we're all sad to hear that, and therefore his show's more than likely not going to air the next hour. So just want to let you guys know that for all you Larry fans, which I'm a huge fan of Larry. We were talking about gold at the end here, and we were looking at we were talking about on the 1060 area. I'd been relatively bearish on this trade, and we talked about let's just now wait. Maybe we're not going to buy these inflection points. We're going to either sell resistance or sell breakdowns. Well, that weekly close never happened below the 1060 area. Last week we closed at what? Well, 1060. So one of the things that I'm doing is just waiting patiently on gold. I think gold more than likely should have had just like the notes and the bonds, a little bit more of a violent reaction relative to what's going on overseas and relative to the S&Ps. I know we've had a move up. This is a 17-point move up right now. But here's your 240 sitting at the top of the profile here. And as we look at this 1071, this consolidation around and move higher, this is what I want to see. I want to see either a new profile attempt to appear on the 240s, or I want to get into that 1091 area, which is our daily unfair low, to start looking at this as a sell resistance situation again. I'm just not convinced that it's time to get long gold in a huge way yet. You want to see at least, if you're going to be want to be long gold, you're going to want at least to this to traverse back above the unfair lows and close above the unfair lows on our daily, and also that coincides with this big number 1090, 1089. So let me go back in our scanner for a second. Let me go to gold. And again, we've got the charts here, which are cool now for visuals within the scanner, which we're just monitoring today because we want to see all the changes that we made go through properly in a real-time market environment. So there's that POC on the weekly. There's that unfair low on the daily. And here's where gold is right now. So I'd prefer to sit tight on this. I'm not a big fan of going long gold and get back up into some resistance areas and then look at this from the short side there. Again, I think we would have had more of a violent reaction on gold on the long side in a situation like this, and I just don't see it happening as a big fear component yet. So taking a look at the S&Ps, just a review here. I'm looking at this DMZ at 2002 down into 1994, and I'm looking at this as a DMZ to buy when we get back above there. All right, I'm not looking at this as as a sell a down opening situation. You want to, the odds are not in your favor selling a 300-point gap down in the Dow. They dismantled the DAX. My goodness, look at this thing. All right, so, what do you do with these situations? Here's a DAX, kind of similar situation as the S&P at 10,209. You've got some support down here, but right now, again, I don't think you have anything to hang on to with these, with this particular index. I think you're probably much better served looking at the S&Ps if you've got to trade an index right now. We're going to take a look at the Nikkei really quick. This is another one that just got taken out back and shot. A little bit weaker situation than some of the other indices out there in the last month or two. 18,475. We're going to have to get back above there to start looking at the Nikkei in any kind of long stance. But right now, this morning, this is not a future on the CME that I will be looking at selling. So this is kind of a wait and see there. We're going to go back to the notes really quick. Again, we talked about this a little bit. I expected a little bit more of a violent reaction on the upside with these treasuries. So again, that's making me look at the S&Ps as a possible trading bounce. And again, you might have some intervention by the Chinese government. Again, you never know. A lot of circuit breakers were hit over there, and they can all of a sudden just seemingly make things better, which it's not a free market situation, as we know in China, on any level. We're going to take a look at the XLY really quick. This has been one that, and we've got a gap down to 76 this morning. We've been talking about this, selling resistance on it, and being able to try to take advantage of situations on the XLY when we can. I did a report on this, selling at 80.50 to 81.50. Now we're getting below this 77.67 area. So if we can rally back up into that area, that resistance area with an S&P bounce, I'm looking at selling 77.67 now. So I think we're trading 76 pre-market, somewhere in there. All right, and we're going to take a look at Amazon relative to that trade. Let me read the den here to catch up. Okay. All right, so Amazon, where are we at this morning? It looks like we've got a print pre-market at around 660. All right, so, again, we never had a weekly close above this profile. That's, we talked about that. We talked about 684 being resistance on this. So now we're back. Let me just go to the shorter term time frame here. That's on Friday's closing price. Okay, so here's where we're at pre-market. Okay. God bless. Hold on. We're at 659. Okay, 659 is where we're at pre-market. Man, I got so many charts going on here. All right. So, again, probably not a morning to sell things. Any types of rallies back into 675, if we can get any type of bounce in the S&Ps and Amazon rallies back up, I think this might be a decent situation to sell at 675. All right, but right now you're going to have to wait on this particular type of trade. I'm going to go into AXP. Man, bad news and a gap down in the market. 68 pre-market is where it says we're trading. Again, this hasn't been the darling of the financial world here. Without question, that Costco news just, been betty good, bad to American Express. So as we look at this close at 69.55 before the holidays, we're trading 68.20 right now. You got 69.62. 69.62 would be resistance for me to sell AXP again. All right. Any type of market moves up, I think you got a chance to sell resistance on AXP. Not exactly acting terribly bad on that Fidelity news, though. I will admit that. Facebook, we're going to take a look at that really quick. See how some of these things are acting. Okay, so pre-market 102.28. So, again, you've got massive, insane support. 99.24, 99.86. Let's just call it 100. Got to give yourself a little bit of noise there. Got to give yourself a little bit of noise there. But if you're ever looking to buy Facebook, you may get a pullback, and this may be an opportunity for you here around 100. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Thanks for bearing with the new schedule. I'm a little mixed up here, and I appreciate you guys, if you are understanding it. So here we go on the S&Ps. We talked about, not selling a 300-point Dow gap down in the morning. We always talk, where's the leverage? Where's the odds? We've got a very overextended situation expansion in our breadth calculations on our short term, and we've reached some of these bottom parts of these DMZs around here. If this thing's rattling around in 1994 to 2002, I'm not wanting to play around with it. I want to see it get some legs back up. We talked about some relevance type products that we've had on the radar screen this morning, namely the 10-year, namely gold. We're going to take a look at the dollar really quick. We haven't talked about that. 98.30, 98 to 98.30. That's been that big DMZ on the dollar that's seemingly holding. I expect this actually to really, really get on a rocket ship and start heading north. But that's where I've got my stops on this. Let's take a look at the Aussie dollar. This is one that I've kind of been a big fan of if you've been watching this show. And, with the slowdown in China, the commodity complete dismantling of a lot of the commodity prices still holding up relatively well. I'm looking at this as a long-term situation. And the guidance of this trade up to 240, I always kind of ratchet down time frames on my profiles, and I look at these as like a guiding light situation. And now we've broken 72.46. But what is the big, kind of stepping back and looking at the big picture here? We're back down into the massive support area around 71.69. So I'm trying this again. I didn't want to give back too much on this trade. I was trying to let it breathe a little bit, but we reached a high last week of 73.27. So we had about about 170 pip move up in the Australian dollar, but you've got to be able to put trailing stops in. This POC has been this POC on our weekly profiles at 72.77. So again, I was orienting some stops myself, around this, top of the hill, roll down one side or the other on our long-term profile there. But the 240s, again, I had to get stopped out of that trade, but I'm going to try it again here around at our bottom of our profile on our weekly and our daily here. And I know this is a big move in the Australian dollar, and their whole economy seems to be predicated, at least in people's minds, around what's going on in China. But again, we just might have a trading opportunity here. Let's take a look at the Canadian dollar. This has been one that we've been kind of beating the desk on the long side, also in a little bit with a little bit more conviction. We talked about trying to buy this 138.12 again on any pullback. So that's seemingly kind of borne itself out to work out well. And we've got a profile appearing well below price action, which if you watch this show, that is very, very bullish. Okay. So that being said, I still like the Canadian dollar devaluation trade, if you will. And that's the way I'm looking at a couple of currencies that have been on the radar screen. Now, ruble, a lot of you guys probably don't trade the ruble. Still a massive fan of this. Don't see any end in sight in this trade. We had a kind of a big volatility day on, was it Wednesday? Let me see here. Yeah, right before we took off for holidays. But again, not a lot of hints of a new profile attempting to appear on the long term. Here's the weekly on the ruble. So again, I think you still got to look at this as something that's going to continue to get devalued. We're going to go back to crude oil really, really quick. If you guys are seeing this, I hope still. Where's crude oil? Here we go. All right. So as we look at crude oil, 36.82, kind of, I would say, burning down the Saudi Arabian embassy is relatively scary for, OPEC type crude oil type trade. I mean, this is not really moving on that type of news. And 36.82, we never got to close below it again on our long term. But again, I'm not looking to buy crude oil right now. You got a selling point here around 37.62, and then breakdowns below that lower number on the weekly, 36.82. So again, I think crude oil's to be sold still. Again, the reaction with crude oil right now with all the things going on, and then you got to factor in the so-called problems in China or perceived problems in China, which I don't, I'm still not convinced that that's going to be that big of a deal right now. And crude oil could settle back, get back down below 36.82, and then continue to drift lower. I just, again, all things considered, is, turn the wrench the same way. Turn the wrench the same way until we're technically broken. Let's take a look at the NASDAQ, and I apologize for not getting that on the screen until now. All right. So if we can get any bounces in these indices, 45.15 is a big number here on the NASDAQ. We're starting to break down below it. But again, I think, you've got some DMZ space, if you will, up into 45.47. So I want to take a look at Apple. And pre-market, we're 102.92. All right. So we talked about not buying Apple at these inflection points. We talked about selling the breakdown. All right. Not a big fan. Tom's not been a big fan of buying Apple. And I think right now you've actually got an opportunity on a gap down here. 102.87 is where we're trading right now. If we can get back up and rally back up into that DMZ 104.29 to 106.29, and again, that's a pretty big, that's a two point spread there. That's something to be looking at, selling Apple. So this morning, do you have anything to buy? I'm not a big fan of buying Apple, so this is a sell resistance trade. And we've been talking about the relative weakness of Apple relative to the markets. And again, I think this stock may have seen its highs, actually. All right. We're going to head to break in just a second here, but we're going to take a look at one more stock. IBM 135.50. And we're going to talk about this when we come back from break. I'm still a little mixed up on our breaks here, guys. No, we got a couple of seconds left here. So IBM 135.95. We're trading 135.50 right now. If we can get any rallies in the market right now and IBM starts showing some just hints of sympathetic bounces, I think you've got a chance to sell this around 136. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So if you're joining us late, we've had obviously a big gap down in the markets. The Chinese market has imploded over 6%. The Nikkei's down relatively big. S&Ps are in sympathy coming down, but we've been talking about this. Gold's not exactly acting like, it's coming off inflection points at 1060. Not exactly a massive move. Bonds and notes are not acting exactly in a crazy manner, heading straight up like the world's coming to an end here. I'm looking at the S&Ps as not a sell this down market opening, but looking at this DMZ down here is possibly a trading opportunity. We want to see this thing get back above 2002 to start looking at it like that and start showing some base situations down here, namely a new profile attempting to appear on our 240 or just a new box locking in. We don't see any hints of that yet. We could have a little noise below this DMZ from 2002, 1994, but again, I'm not a big fan of selling a down opening like this. So I'd like to see some kind of base mechanisms and some indicators here and get back above that 2002 and just, use that DMZ, trade a little lighter. Don't put a ton of weight on a trade like this and on a morning like this. But that's the way we're looking at it. We're going to take a look at, we talked about crude oil. We talked about the reaction there is not exactly as rosy as it probably should be relative to the, all the news out there right now. So crude oil, we're looking at selling resistance still. We talked about the Aussie dollar. Let's see. We talked about the Aussie dollar a little bit. We talked about, the relation to China and coming back down into major inflection points, 71.69. And taking a look at the Canadian dollar, still a very decent trade on the devaluation of this from the long side on these charts is what I'm trying to say. We're taking a look at the U.S. dollar. We talked about looking at this from the long side still and just continuing to buy this thing when it comes down to 98, 98.30. We've rallied up significantly and look at this particular trading opportunity. We pull back into support. And now we're just bouncing hard off this weekly unfair low, 98.04, and daily unfair high, 98.30. Still like that trade very, very much. Let's see here. We took a look at AXP earlier. Just want to reiterate this one. Gapping down 68.06 pre-market. Looking at opportunities 69.62 to sell this thing if we get any kind of market bounces. American Express may be a sell opportunity again there. We took a look at Facebook. Facebook, you got massive support around 100. If you guys have been waiting patiently to try to buy this thing forever, you may have to just wait a little bit longer. May have to wait a little bit longer. Any type of pullbacks in the 100 on Facebook is going to be a very ripe opportunity. Let's take a look at Netflix. The big cap usual suspects here. Pre-market, we're trading 109.71. You got major support around 109.20 on this particular stock. That's the big support on Netflix if you're looking to buy this on pullbacks. Guys, Larry is out today. Basil's going to fill in for him. Stay tuned. You'll thoroughly enjoy listening to Basil, and we'll be back again tomorrow. And we're testing these on a real-time status. We're testing all of our charts in the scanner so we can get out an upgrade to you overnight. We'll be back. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.